Hey there, everybody. Thomas Wood with ValueCharts.com. It is Monday, July 6th. We're going to take a look at the S&P. Now, if you were watching or paying attention last week, if you're a member of Value Charts, we were telling everybody be really careful holding open positions through the weekend because there was a large risk for gap because of all the current economic environment and everything that's going on with Greece. Well, a lot of markets did gap. One of those markets is the S&P, the stock market as a whole, gapped way down when we opened up, and then has continued to follow through and filled the gap. So this is something you can watch for when you see a market gap. Now, you don't necessarily want to buy it just because it gaps down. We want to wait until it proves to us that it's going to be reversing. So how do we do that? Well, we gap down, we bounce, and we come and we put in a higher low here with stronger momentum. Now, when that happens, then we can say, all right, now we have a bullish momentum set up for a potential gap fill. And then you look to jump in to fill the gap. And you can see momentum continued to put in higher highs and higher lows all the way up until we had filled the gap. Once you fill the gap, then it's time to close the position and you wait, because what will happen a lot of times is it will fill the gap and then reverse and go back down the way it had initially gapped, which is what's happening as of right now. So pay attention to this when you do have a gapping market. Wait for that second bounce and make sure that your momentum agrees on the direction, and then you should be in okay shape for a potential gap fill. All right, that is it for today. I will see many of you in the trading room bright and early tomorrow morning. And until next time, happy trading.